In this video today, I'm going to explain to you guys how to start day trading in 2026 and to go from unprofitable to profitable in just a simple 8-step video. Hope you guys enjoy, and if you like this, leave a comment down below and I'm going to start doing more educational content. See you guys. Alright, what is going on, guys? Back with another trading video. I want to start making more educational content for you guys that I think will help all you guys out. So, title of this video, how to start trading in 2026. I think number one is finding a mentor, whether that is TJR, who is my mentor, and watching his boot camp to go through the basics. I think that is the best step that you can take into really understanding what day trading is and how the market actually moves and what is a candlestick. He breaks down everything from the basics to literally everything that you need to know starting off. It's all the basic stuff. You can either stick with it like I did. I watched a little bit of ICT after him to understand a couple more confluences, but other than that, TGR after the boot camp, I was kind of on my own. And if you want to become profitable and get a payout, I recommend listening to everything in this video. Number two, start paper trading. Paper trading is so simple. As you can see, we're on tradingview.com right now. That is the first step that I think all of you guys should take. And then if you see the trading emblem right here, right now I'm on my the brokerage I use. But when you go into the website and log in or make an account, you're going to see a button up here that says trade, and it's going to say paper trading on it. That is what you need to start on. Like, simple as that. That is going to help you. First of all, you're going to be trading without using real money, so there's no stress into it. You're simply just learning the skill. Do not put money into trading when you first start off. You're going to lose it all because you have no idea what the fuck you are even doing. Number three, get FX Replay. FX Replay is a free website. We can search it up right now. It is a backtesting tool. This is what helps you really start to understand what trading actually is. It's not free. You can do it for free for temporarily, but buy the monthly thing. It's only like $15 a month. If you can't do that, then I recommend get a job. That should be actually number one on this list. But here's a little breakthrough of it. You could basically get to go back in time and you get the back test. This helped me a lot, really basing my strategy, and we'll get to that because when you first start trading, you have no idea what buttons even do or what it even means. Most people don't even know that you can make money if the market goes down, which is funny to me because I had no idea about that. And some things about TradingView and FX Replay just to start off. When you're in FX Replay, you're going to click, there's going to be the same, it's going to be the same layout. Click this button right here, and then you're going to create a limit order. For FX Replay, you can do that when you want to enter a trade, and it kind of just shows you if you're correct or not. When you first start off, you're going to have no strategy, and honestly, my best advice is just guess. Take a guess where the market is going, and this is going to be one of the fastest ways you're going to learn how the market actually moves. Like if we look right here, I'm not going to teach this today. If we go into a higher time frame, actually we'll do the 4-hour. It's probably the best example. Market moves in very simple ways. It is creating highs and it is creating lower. So if we're in an uptrend, this is a little teaching moment. If we're in an uptrend, what price likes to do is come back down. So we're going to create a high and then create a low and then we're going to create a higher high. That is how the market moves. The market moves super simple. And honestly, I'm going to draw it out for you. I think that's the best way to go about it. Market moves like this. Boom. 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 That's an uptrend. It creates a high, creates a low, creates a higher high. And then if we're on a downtrend, creates something like this. Boom. Creates a high, and then creates a lower low. This is how the market moves. That's just simple advice for when you start. So when you start looking at the chart, think of it as in trends. The market moves in trends. But that's for a later video to explain that. Number 4, buy a journal. This is like the biggest advice. If I could find my journal that I used when I first started off, but for example, just something like this. It doesn't have to be a journal, just something to write on. Now I journal everything online. I'll show you. Journaling is one of the most important parts. Today, I took a trade. I won it. I blew 2 accounts, but then I passed one because it was just full podium. Don't do that if you're first starting off. That's just because I'm more experienced and I'm not going to waste my time in evals. But these are hundreds of journals all the way back to February when I started journeying online. I also take screenshots of every trade just because it helps. You get to go back and you get to look over your notes and look back over your trades to see what you did right and what you did wrong and what you can learn from. Journaling, not only you should journal your trades, but you need to journal your psychology. I don't know if you guys read through one of those journals, but this is something I started doing recently because PB Patty actually started talking about it and actually stuck with me. That's going to help me in the future. Journaling your emotions and the way you feel. I used to do this in the way I feel, and I haven't done that in a while, and I just journaled just my trades. But psychology is the biggest part of trading, and I promise you want to write down everything. What you did when you woke up, what time you woke up. They're just little stuff that's going to help you and benefit you to get better quicker. Also, you're not better than anyone else at this. Obviously, some people are going to learn quicker than others, but relatively, everyone goes through the same steps. No one's going to become profitable in a month. No one's going to become profitable in 2 months. And no one's going to become profitable in 3 months. If you have done that, you're one out of thousands or millions, to be honest. It takes a really long time. It took me 5 months to get my first payout. It took me 7 months to get a payout after that. And now I've been getting payouts relatively consistently for the past couple months. But journaling, biggest thing. Psychology is the biggest thing in trading. It is really 10% trading, 90% psychology. Some would say it's 95% psychology, 5% trading. 5, find a pair and stick with it. So if you go on TradingView, you're going to see we have these pairs. You can trade any single one of them. But I recommend looking at one. If you can trade in the morning from 9 a.m. to, or it says up here, trade from 9:30, but I would recommend getting on the charts a little bit earlier. You can trade from 9:30 to 11, then I would trade morning session, and I would trade either ES or NQ. I trade both, but those are the 2 pairs that I would look at for sure to trade in the morning. If you are someone that can only trade at night, and it is like from 6 o'clock to 9 p.m., I would recommend trading gold, where you can look up the symbol right up here, type in gold. Gold tends to move very similarly it moves. I'm not even gonna try to say the word. It moves like kind of New York Open when it's in Asia session. As you can see, this is not bad price action at all. I don't know if I would have taken this. No, I would have not actually. Yeah, could have taken this short right here. But it is the best pair to trade, in my opinion, at night. Actually, let me just go to my side because there's different ones. But yeah, find a pair, stick with it. Don't hop over from pair to pair, especially at the beginning. You're going to confuse yourself. Every pair is different and trades a lot differently and moves differently. 6, find a strategy and stick with it. If you use TJR strategy, then from the boot camp, stick with it. I didn't stick with it. I moved to a different one, and a different one, and then I moved right back to TJR. Stick with it. You're not going to understand it completely at first, but honestly, find a strategy that fits best to yourself. Find one that is easiest for you to understand. There's not someone who has the best. No one has a strategy that has 100% win rate. Everyone's strategy is just an edge. Okay, my win rate is like 75 to 80%. So it's best for me. If there's a strategy that is better for you, use that one, but stick with it. Do not hop from strategy to strategy. You're going to confuse yourself, and you're only gonna delay your time until you are profitable. 6, find a 7, prove yourself that you're profitable on demo. This is paper trading. Demo is paper trading. Demo is also evals on funded accounts. It's not real money. It's not your money. Especially when it comes to funding accounts, which I'll get into later. But on demo, strictly the paper trading that I was talking about. You can also place trade by pressing buy or sell, which I'm not going to do because I'm logged in right now and I'm not going to risk my account. But yeah, prove to yourself that you're profitable on demo. I recommend 3 months. TJR said this as boot camp, and I stuck with it. I didn't go onto a fund account for 3 months, and I just stuck with demo until I proved myself that I was profitable on demo. There's no psychology on demo. The strict thing is finding a strategy and sticking with it. Once you get to a fund account, it's a lot different. That's when psychology actually comes into play because it's money that you can actually win or make. 8, buy a funded account. This is when you have proved to yourself on demo that you are profitable and that your strategy works, and you can move on to buying an account now, and you're not putting your real money in, but you're putting in you're buying an account. Whoops, I was going to show that later. Blew this today. But I use Lucid Trading. There's a bunch of different accounts out there. If we just go to Lucid Trading, just look it up, boom, pops up to the screen. These are the accounts. When you're first starting off, don't do pro, definitely don't do direct. You're gonna waste so much money doing that. Holy shit, 20% consistency is terrible. Definitely don't do that account ever. Buy a flex account. I recommend starting with a 50K flex account. If you prove yourself that you're profitable and you have the money when you're first coming into trading, if you have a good amount of money saved up, you can buy these higher accounts because you prove yourself you're profitable. But starting off, I recommend a 50K eval. That is all you need to see some money, but you can't think about the money going into it. You have to think about the skill. But basically, a prop firm gives you pay. Say I select this. Okay, it just shoots me right back here. But say you buy the account. It gives you $50,000 in capital, but you have to pass a challenge on the eval. If it doesn't have a consistency rule, which basically means you can risk how 2,000, which is what a 50K account has. You can risk 2,000 to make 3,000, so you pass the account in one day. That is what I do now with no consistency rule. But when I first start off, and what I recommend when you first buy an account, just take it slow. If you're on a 50K account, you want to risk 0.75 to 1% of the account, which is $350 to $500. Starting off, I recommend just risking 350. Something huge about funded accounts, I do not recommend using minis. Minis is for big boy traders or traders who have more to risk, or if you have a higher account than a 50K, I recommend using micros. That's exactly what I use. It allows you to manage your risk. Say you are in a position where, if I go down here, say, wow, I was about to take this trade too. Say you want to take a long and you want to risk to here. Say your stop's right there. Boom. See, if I was at a mini and I clicked 1, it would be, well, actually, not me if I can do that. If you're on a mini, so say I just go to regular old and Q, and I want to risk a mini. If I risked 1 mini, that is $1,000. That is a lot of risk. You do not want to do that, because you can only do 1. You cannot do 0.5. You can only do 1. So I recommend, do not click buy. I recommend using micros, because say you want to put your risk here, boom. 1 micro is now $17. Then if you do 12 micros, 200, 15, you would do like 20. Boom, 20 on the dot to risk 350. It manages your risk. It makes sure, basically, that you're not over risking and you're not blowing your account on the first trade. Thankfully, I'm on my. Semi-funded. But yeah, that is how I would start trading again. If I had to start from scratch, I would do those exact things. Once you're on a funded account, it's really all up to you and your psychology. I also recommend reading a book. Put it as the final one. It is Trading in the Zone by Mark Douglas. This book helped my psychology drastically. I would also recommend watching his YouTube seminar. It's a 3-part series. Look it up on YouTube. Trading Psychology, or it's a 4-part series.
Hello.
No.
My name is Mark.
3 parts. Just these 3. That's all you need. It's long, but if you're at work and you can just put in some headphones, definitely recommend doing that. But yes, that is how I would start trading in 2026, and I'll see you guys next time.